Hi everyone, hope you're all doing well, and today we're going to do a video on DraftKings. We're going to do a bit of a stock update on this one. It is what you guys voted for on the poll yesterday. I do really love doing the polls because then I get to see which videos you guys want, and it was DraftKings. It just managed to beat Skills, so we are going to go through DraftKings today. We have had their recent earnings, and because of that it's given us a bit more to talk about, and just my thoughts on where we're at with DraftKings. So it is my biggest position in the US stock market, so hope today's video is useful. If it is, just hit that like button, that'd be absolutely amazing. And we'll take a look at DraftKings. Now, if you are on the Patreon, I have just uploaded an exclusive video on Patreon, which is my US stock market portfolio review for November 2021, and that's just showing how my portfolio is going this month so far in November, and a bit of an update into that. So if you do want to see that exclusive video, as well as 2 exclusive videos a week, a Discord with 600 members on, and when I am buying and selling companies in real time, make sure you join through the link in the description, and then you get to see all that sort of stuff and all that content. Yesterday, I did buy a stock and I did sell a stock. I'm going to leave that there. I'll probably update it on the YouTube in a few days' time. And if you do want to start investing, there's some links to some brokers in the description, like Stake, like Freetrade. You join through there, you get a free share as well. But let's get stuck into DraftKings. So my history of DraftKings, in case you're kind of brand new to this channel and you've never seen me before, is that I am obviously invested in DraftKings. It is my biggest position in the US stock market. It's a company that I started buying this year, so it's relatively new. You know, for me personally, I look to buy companies, and when I buy these stocks, I look for 100% return, and I look to get that in a 2 to 5 year period. So for me to be in this stock for a year is quite a relatively new position, and with this stock I do see 100% upside in the next 5 years. In fact, I'm not going to lie, I did buy this one and make it my biggest position because I see potentially a 5x return in the next 5 years, but minimum I do want to walk away with double my return on this investment. Now, like I said, it's quite a new investment. I started buying this one quite early on in the year, and as you'll be able to see, realistically this year we've been pretty much flat. DraftKings hasn't really done too much this year, but it has been in periods up and down. But I'm not too bothered because this is what this has been able to let me do, is to build up a really good position over this year. And my average at the moment is around about $51, and it is currently $44. So I am down slightly on this position, nothing absolutely crazy. But at the moment, even though the share price might be disappointing on a 12-month period, for me it's been absolutely perfect because I've got a really good position now built in this company that I think is going to be fantastic over the next 5 years. Now, it did have a really good start to the year, and then it did kind of have a bit of a drop off with a lot of these small market cap stocks. A lot of them have done. We did start to see a bit of a rally here, but recently we have fallen off a cliff on the share price front. We've lost 30% of the value. No idea why. Really, the drop happened because of the Entain deal. There were rumours that DraftKings were going to buy them. They came out and said we're not buying them, and it caused the share price to drop 30%. We look at DraftKings now and it's down 30%, and the cause of why it lost 30% of its value isn't there anymore, but yet it's still down at $44, which is absolutely bonkers, and that is just a example of the short term in the stock market. Anything can happen. So from my point of view, I mean, DraftKings now that we're getting towards the end of the year, we're about $44. In my opinion, DraftKings is actually quite undervalued at these prices. At the start of the year, I basically went on to say that I'm buying DraftKings, and I am actually buying this not at undervalued prices, because I am buying this because I think it's an absolutely amazing opportunity. I think this is a great stock in the next few years, and I'm willing to pay a premium for this. As the year's gone on and it stayed at these prices, I am now looking at DraftKings going, this is bonkers. You know, this is what this year for DraftKings has been absolutely amazing, and now that it's $44 still is crazy. For me, in my opinion, DraftKings is already putting in results that would command DraftKings to probably command a $80 plus share price right now. So while it's down here, even though I'm quite built up on this position, I do not mind just keep nibbling and buying a bit more. Now let's get on to some of the recent earnings. The recent earnings have been very good. We're going to talk about the most recent one, Q3, in a second, but I just want to show you this build up of how good these earnings have been this year. EPS isn't really a big one for me because we are ramping up, we are trying to take market share, and the results, the profitability side of it will come in 2 or 3 years' time. For me, I don't really focus on that with DraftKings, and I will touch on that in a bit more detail in a couple of minutes when we go back to the whiteboard. But on a revenue point of view, the first earnings, so this was February earnings, revenue massive, 145% growth. And the big thing is here that when we came into financial year 2021, look at the guidance, 750 million to 850 million. Keep remembering that number. So they raised their guidance. We go into the next earnings, May, on the 7th of May, revenue beat 252% year over year. Company raises its financial guidance again from what we were at previously. Now we're talking about 900 million to 1 billion, a massive increase. We then go into Q2, August the 6th. What we have here, revenue 320%. Company guidance raised against 102 billion to 129 billion. We go into Q3. What do we have this time round? 60% revenue growth. And then we get the guidance for 2022. There is a bit of a midpoint change of the company's outlook in 2021. But overall, look at what DraftKings has done this year. DraftKings is given a range of 1.21 billion or 1.29 billion. Look at what we had at the start of the year. 750 million to 850 million. We are talking about a company that has increased their guidance so much this year because these revenue beats have been absolutely amazing. And I'll talk about Q3 in a second because Q3 was an okay earnings, but the thing is that we've got so used to absolutely blown out the water 10 out of 10 earnings from DraftKings that this is still really good earnings. But DraftKings this year has been absolutely on fire, and this is going back to the share price right now. You look at this here and you look at what the company was forecasting at the start of the year and look where we're at right now. And the company is basically where we were at. You know, like I said on the guidance, look how much they've smashed it and we're still where we were at. And this is what I mean, that DraftKings now, I bought DraftKings and thought this is going to be absolutely smash it, which it has done. But the thing that I have now is DraftKings is still smashing it and the share price isn't reflecting what's going on. And that's how good the earnings have been. Now, just a side note on the TAM side of it, people don't realize how big of a TAM this is going to be. Originally when sports betting happened, everyone thought, yeah, it's going to be a massive growth sector, but this sector in the US is growing faster and faster than what we ever thought, and the TAM is going to be absolutely huge in this area. And this is a TAM, not that's, you know, there's not really that risk with this TAM that's growing. There's a bit of competition, but this TAM has been proven. This isn't a TAM where you go, oh, I've heard a lot of people go like the metaverse is going to be absolutely huge. But we don't know that. With sports betting, we do know this is going to be one of the biggest TAMs that's going to grow fast because it's happened in Europe. Europe is the evidence that sports betting is successful. And now that it's just only been allowed in the US, this is still the really early stages for this. This is only a 3-year-old TAM. But it's a TAM that we know is going to be successful. And this is why I'm so bullish in this, is that I'm buying into one of the fastest growing TAMs that we know is going to be successful. And that's why I'm willing to bet so big on DraftKings. And just a little bit of a side note here is that we have just had New York confirmed. So DraftKings will be in New York in the next kind of coming few months, probably 2022, which probably won't be factored into the guidance that they gave. So this is going to be another bit of growth going in the 2022. And New York is a very well populated state, and it also is very big on its sports. So this is a really great news going into 2022 for DraftKings. So that was just a bit of a recap on the history, my history with it, the share price, the earnings and how earnings have been smashed so far this year, and the TAM potential in this area is huge. At the moment, DraftKings is valued at about a 10 billion company. I think in the next 5 years, we're going to be talking about a company that's 100 billion. And the TAM just keeps growing. People keep going, oh, we didn't realize it was going to grow this quick. And the TAM is going to be successful. We know this from Europe. So for me, this is why I'm so confident going into this one. I wouldn't normally put a company that is unprofitable as my biggest position, but this is why I'm kind of going big on this one. Now, going into the recent earnings, because this is really the new stuff. This is, if you've been on the channel, you kind of know that because this is what I've talked about with DraftKings previously. But this is the new stuff, Q3 2021. Overall, I gave it an 8 out of 10. I did an exclusive video on Patreon reviewing all the earnings from last week. On that video, if you're watching on Patreon, you guys know, kind of covered a few of these things before. But I gave it an 8 out of 10. It was still a very good quarter for DraftKings, very good growth, things moving in the right direction. The only reason why I gave it 8 out of 10 is because, like I showed you just a few minutes ago, the earnings that DraftKings have pulled out on Q4 last year, Q1 and Q2 were 10 out of 10 earnings. We had a company that delivered 10 out of 10 earnings in the last 3 quarters, which is very hard to keep up them expectations. So these earnings were still very good, but it's just that we got used to DraftKings absolutely smashing it out of the water. So overall, I was pretty happy with earnings. And I think it's just the reality check that we can't smash it every single quarter, but still pretty good. Now, the results itself, they were a little bit dampened. The reason why is because there was a lot of outcomes that basically went to the favourites, and DraftKings estimated that cost them about 40 million in revenue. Also, hurt the EBITDA as well side of it. But yeah, the results didn't really work in the favour. If they did work in the favour, they reckon they might have been 40 million better off, which is quite a big amount. Sometimes that's going to happen when this sort of company, you know, you will get them sort of things. I did kind of look at it myself, and obviously they rely a lot on the NFL. I did look at the NFL and go, realistically, yeah, the NFL, you look at a lot of the season so far, most of the favourites are winning, and that's obviously going to affect DraftKings. You know, the only one I think that's a surprise so far this year, I mean, is probably the Dolphins a bit poor, I guess. The Chiefs are a bit poor, but everyone else is kind of where you would expect them to be. So that kind of makes sense. That's obviously one off that you might get every so often. So that when you consider that, obviously that would have made Q3 look even better than what it was, but that was something to consider. Also, that Q3 didn't normally have like the NBA and the NHL a little bit later to start because they were late finishing last season, but there was no NHL and no NBA in this time, so you're going to have Q4, you know, you'll have the NFL, you'll have the NBA, you'll have the NHL going on, 3 of the biggest US sports there, so that's something to consider that wasn't here in Q3. One of the real big positives here is the market share. So DraftKings were starting to take a lot of market share. I think they went from 31% to 33%, which is really good. You consider what the TAM's going to be if the TAM of the whole addressable market is, we're talking 30, 40, 50 billion in the next few years, and DraftKings take a 33% share of that. That's going to be absolutely huge. So if they can stay around here, this is absolutely amazing. It does kind of look like it's now getting into a shootout between DraftKings and Flutter. I think there's room for both of them. I think that there's still going to be a lot of battle between who takes the biggest market share, DraftKings or Flutter. I think that's still up for debate of who's going to be number one, but it does look like them two are going to be the big dogs here, and there's a few smaller ones down there, but they're going to take the big market share, and there's going to be enough room for both of them as well, which is good. Now, getting on to the market share side of it, the big thing with DraftKings, and this is why I'm not too worried about the profitability side for the next kind of 1-2 years on DraftKings, is the big thing is that they're battling away with Flutter and DraftKings and Flutter. So the big thing that they want to do as DraftKings is get that market share. So when a new state comes online, because remember that all the US states aren't online doing sports betting yet, more years go by, the more states that come on, New York for example, what DraftKings want to do is kind of get them to sign up to DraftKings, not Flutter. The way you do that is by putting offers out. You do marketing, you know, you sign up now and you get this $100 free bet or whatever, you know, you want to do, and you get them customers to come with you. Them customers come with you and they stay with you, and they are probably going to be locked into that platform for the rest of their life they're doing sports betting, you know, 60, 70, 80 years locked into your platform. So you imagine a lot of these states are coming online, so there's all these, okay, they're coming online, we've got to do marketing there, marketing to there. There's a lot of high costs at the moment, but what will happen in the next kind of 2, 3, 4, 5, 10 years is them customers will stay with you, and then that marketing cost will be recouped in the next few years. So even though the marketing cost and it looks like they're losing a bit of money at the moment are high, the rewards will come further down the line, like we saw with Europe and everything like that. So the big thing here is for them to keep taking this market share, and that's why I don't mind about profitability. The big thing is having that market share, so you make more revenue and you make more profit down the line from them customers. And this was really focused on in the earnings call, in particular of DraftKings. New Jersey. One of the biggest negativities to DraftKings is that, okay, you're a really fast growing company, absolutely amazing, but the problem is that you're not making profit. And DraftKings went, well, technically we are. We're just investing quite heavily. If you look at our mature states and then their first state, which is New Jersey, which was coming up to 3 years since they launched New Jersey now, New Jersey is profitable. Their first state they launched 3 years down the line is profitable. So the people that say this company can't make profit or they lose too much money, New Jersey is the evidence to blow that out of the water. DraftKings can make profit because their first state, New Jersey, is profitable. And they class this as a mature state. A state that's been around 2 or 3 years is classed as a mature state. But the thing is, this is where it gets absolutely crazy. What DraftKings try and do is their aim is to do loads of marketing and then get every state profitable within 2 to 3 years. That's the aim. So you look at a lot of these states that are coming online right now, DraftKings are trying to get them profitable in the next 2 to 3 years. New Jersey came online. Do you know how long it took them to get to New Jersey to profitability? 1.5 years. So even DraftKings targets of getting to profitability, they're even outperforming that which is bonkers. You have revenue growth and you have the path to profitability. New Jersey is the evidence. They even beat their own targets. So you consider in the next 2 to 3 years, when these states mature, they're going to be profitable like New Jersey. And this is the most bonkers thing as well. This is absolutely bonkers. What you're going to have right here is a mature state, New Jersey. New Jersey's still growing at like 20% rate. 20%. That's a mature state. This is the big thing, is that these states that they're maturing in and making profitability, they're still going to grow at a huge amount. 20% growth is absolutely fantastic, and it will keep up double-digit growth for quite a few years. So this company here has the vision of growth, it has the vision of profitability. They also said they're going to actually talk next year a bit more about where they see profitability, New Jersey updates and everything like that, which is absolutely great. So the one big negativity towards DraftKings, in my opinion, this is why I can take that risk of it being my biggest position as an unprofitable company, because of the TAM, the proven TAM, and the profitability can happen. It is proven to happen. They're doing it. And you think about, the more these states mature, you have the growth, you have the profitability. It's really exciting. And now the last little bit that's in here, the guidance. They gave guidance for 2022, and I saw guidance and I went, oh, you've sandbagged. I straight away thought they've sandbagged this completely. They gave guidance of 1.7 billion to 1.9 billion. Now, like I showed you earlier on in the video, the guidance was massively upped as the year went on. I am seeing exactly the same thing that's going to happen in 2022. They gave guidance of 1.7 billion to 1.9 billion. Now, this is okay because analysts are actually predicting this guidance. So I'm fine with them doing this. Realistically for me, I actually have DraftKings next year putting in about 2.1 billion. So you can see the guidance they give, I'm a little bit higher than where they're going to be. And I think they're going to do it. The reason why they're going to do it and why they're going to get into that 2 billion range is, first of all, you're going to have more new states. You're going to have the states like New York coming online. That's going to give them a lot more revenue growth. So you've got the new states that aren't factored in. They're going to come online. They're going to give them massive amounts of revenue growth, as well as the growth from states that they already have. So you're going to have that growth coming in right here. Now, considering that they're actually going to do about 1.2 billion in revenue this year, they've made a big acquisition in August. They bought Golden Nugget, GNOG. Now, I think GNOG will probably give them about 200 million in revenue next year. That's going to put GNOG around about, they're going to do 1.2 billion this year. Hopefully they do all the same revenue. You add GNOG in, I think we're up to 1.4 billion already. So for 1.4 billion to get to 1.7 billion or 1.9 billion is only around about a 20-30% increase. Now, DraftKings this year is going to grow about 100% revenue rate. I cannot see DraftKings going from about 100% revenue growth down to 20 to 30% revenue growth. I can't see it. I think, in my opinion, we are going to be talking about DraftKings somewhere in the 40 to 60% revenue rate next year. So overall, like I said, the results were really positive. I think guidance for next year is, obviously it wasn't taken negatively because that's what analysts are forecasting, but this is what I'm saying. I see DraftKings beating this guidance that they've given, very much how they've done this year, as I showed you earlier. So overall, you can see here, this is my biggest position. You can tell I love it. I look at it and I just look at what's going on with the share price now and how discounted that is. The TAM, the earnings from this year have been absolutely fantastic. The growth for next year, the profitability side, and where the path to profitability does exist in this one. It is the most exciting stock since I saw Square in 2017. I went, this is going to be huge. It did very well. 2018, I saw Shopify. I thought this is going to be absolutely great in the next kind of few years. I mean, both of them are up 1,000%. This is the next one that I've seen where I go, this is great. This is what I'm calling my Lamborghini stock. You know, this is the one that in 2025 I'll be looking at and going, right, let's go get that Lamborghini. So this is the one that I am really, really excited on. It's why I backed it, and yeah, it's the most exciting stock that I've seen for a long time, since the likes of Square and Shopify a long time ago. You know, obviously there was Tesla in 2019 that I bought, which did amazing, but I'm not gonna lie, when I looked at Tesla, I never thought it would do what it's doing. And yeah, this is the one that I look at in 2021 and I go, this has a big future in the next 5 years. So yeah, hope the video was useful for you guys. I wanted a DraftKings update. If you could hit the like button, if you knew and you enjoyed it, just hit the subscribe button, and I'll see you on the next video.